Hello, everyone, and welcome to another edition of Bleeding Crypto's Bitcoin Update. It's been a while, guys. I was on vacation for a week, for 7 days. I went to Seattle, had a wonderful time. Washington is such a beautiful state. Got to see a lot. Me and my wife are very active vacationers, so we covered a lot of territory. We definitely want to go back. So much to see. Very, very beautiful state, great city. Friendly people, great food. I can't say enough good things about it. Definitely would recommend anyone going there. So I wanted to continue our series that I've been doing before my vacation. Every 2 or 3 days, I would give you guys an update of what's going on, what I'm looking at the market, what I'm anticipating, my validation points. I've been working off of that chart, doing my trades with my Telegram group. Again, I have a free Telegram group, guys. If you guys want to join it, send me a DM. I'll give you access to my Telegram group, so be more than happy to do so. Also, remember, guys, I do have a partnership with MEX Exchange, so I would really appreciate it, guys, if you could support me as they support me and pay me for these videos, pay me for my time for these videos. So if you could use my link in the description below with MEX, I would greatly appreciate it. They have great liquidity, so I think you would really like using them. So for right now, guys, let's do this. I have a I'm gonna have to pause the video for just a second. All right, I'm back. Sorry about that, guys. I'm doing trades myself. I'm trying to get back. I was doing trades during vacations, but it's a busy day, and I had an alert that just came up for me to take a look at a position that I'm trying to get into. Any case, let's. What I was saying is that I was using the BTC chart that I was been using for the videos, so it got really crowded. I don't like doing videos with crowded charts, so I just opened up a new fresh chart. No indicators, no nothing, just volume and price action. And so we're just going to start from here, guys. I don't want to try to go back and try to find out what the notes from the previous one were. We haven't changed much from the last video. We're still inside of this range. So let's go ahead and just identify the range. Let me put a channel here real quick. I'm going to map it up on this high time frame just to give us a cleaner look. And then we'll right here looks pretty clean. You know what? Right here would be a little bit better because I'm going to talk about this deviation because we've had a couple of deviations outside of this channel. But what I like to do is I'll go to the lower time frames just to confirm. Yep, this looks like a good spot here that I can actually bring it a little bit over here, kind of grab some of that. What I like to look at is I want as many touches inside. I don't care about some of these deviations. Those are going to happen. But I want to see acceptance inside of that channel. The more touches, the better. And you can see here where we're still within side of this range here. Now, what's going to happen next? That's everyone's question is, are we going to go up? Are we going to go down? What's the plan? Well, in order to, first of all, let me just say, I don't know. Nobody knows what's going to happen. What we can do is we can plan for either scenario. And we got to look at areas of invalidation and validation. So in order to do that, in my opinion, the way I do it, better said, is looking at higher time frames. I want to see the context of what's going on. I want to look at this entire move, and I want to look at, okay, what have we done? We've had a really nice run from these lows. We consolidated real nicely here. We gave some back. When we gave back, what exactly did we do on this right here? Let's take a look. Let's snap a line. Well, all we did is come back and we checked the prior area of resistance. We turned it into support. We went up again. Then we consolidated some more. We broke down some more. We deviated from that flip and we regained it. When we deviated, did we stop randomly, or is there any confluence? Let's snap a line. Let's look. Snap a line, look to the left. Not much confluence there with anything. However, if you continue to look left, Look at this. That was a strong area of resistance. Very clear area of resistance that caught the price action. Always remember, when you're coming down, you're looking for prior resistance. When you're going up, you're looking for prior support for resistance. It's the inverse. So here you can see we had a really nice bounce, reclaimed that support resistance, flipped, and just kept on going. Now we're here. What are we doing? We're consolidating inside of this range here. We are doing it with little volume. You can see the volume just has been trailing off. So even though we had a nice push to the upside, we're doing it as the volume is getting exhausted. So does that mean we're automatically going to break down? No, it doesn't. What this here does, this consolidation, it allows the oscillators to reset. So where are the oscillators? Let's look at them. I'm going to turn on my oscillators, the ones that I use, which are EMAs, MACD, the RSI, and OBV. Now, as far as the MACD here, what are we doing? Okay, we've reached a pretty high point here. What did we do before? When we've hit this area on the MACD, what has the MACD done? And even though the MACD is not a leading indicator, it does measure momentum. And when you use it in relation with price action, it gives you a story. Here, let me explain a little bit better. Let me open this up a little bit more. Let me just bring this down, and we'll just use these two for right now. And you can see back here, when we've hit this area here, so I'm just gonna put a line here. We've been here before. What did we do in this area here when we hit this here? What did we do? The MACD, you can see we were consolidating, and while we were consolidating, what was the oscillator doing? What was the MACD doing? It was resetting. We had a little bit of a deviation to the bottom here, but it wasn't a very drastic move. You don't need a drastic move to really reset these oscillators. Look at this. We had a move up here, and we were still above the medium, the zero line of the volume oscillator. And then when we reset, what do? We had our next push to the upside. Now look at where we're at. We're hitting that resistance line again on the MACD. We are putting in a little bit of a deviation off of that cross indicator here. We can easily fall back under it and do a bear cross, but it doesn't necessarily mean that we're going to drop in price action. We can very well be range bound the way we are here, the way we were here, with some deviations to the downside, maybe a back test back into the 300 EMA, or even maybe not even that far down, to be honest with you. We could get right up in this area here, which is a $25,000 area, to reclaim this area here, which was prior resistance, and now turn it into, basically confirm it into support, get back in here. All the while, this is resetting for the next leg to the upside. Now, if that is the case, if we are prepping for the next leg to the upside, what am I expecting? Well, for that, we're going to go into, let's do this here. I'm going to hide the indicators, and we're going to hide everything. No, I'm just going to erase. I'll leave it there for now. I'm going to go to the weekly time frame. Let me see if it doesn't look too bad. No, it doesn't look too bad. Okay. We're going to the weekly time frame, and we're going to strictly just look at price action. You don't need the 200 EMA. You don't need the 300 EMA, the 200 EMA. None of that. Just strictly looking at price action. When you look at this area here, let me find a good area. This area here, I would say, was a very important area. Now, it's not going to be exact, but it gives you a good, I'll stop it right there. And we'll just call it 30,000. I want to call it 30. It's just a few dollars away from 30,000. And now, why did I pick this line? You can draw a box and pick a range, but just for the sake of the video, to make it real simple, this line is really all you need. What am I looking at this line? I'm looking for an area of what? The inverse. Remember, when you're going up into a line, up into a price, you're looking at the inverse of that line. What I mean by that is I'm looking for prior support. Let's go back here. When we blew through this line and we came down, did we find support and we bounced? Yeah, on this here we bounced. This is the weekly time frame, mind you. Look, We came down, we bounced. Could I move this line a little bit lower? Yes, I can. But again, just for the sake of the video, I want a line that gets us close to a round number as possible and get us to enough touches as possible. They're not going to be exactly, but you get the idea. Now, when we had this first run up, when we put in this all-time high and we came crashing down, did we find support in that line like we did back in this area here, back in 2021 and in the middle part of 2021 when we came back down? Yeah, look, we found support, we bounced. We came back down. Did we find support? Yes, we did. We bounced again and again until we had our second half of the bull market rally that led us to that $69,000 mark. Now, when we hit that top and we were coming down here, we didn't get quite close to it. We had a bounce before that. But when we came in here, did we find support? Yes, we did. Yes, we did. Then what happened? When we fell below it, did we find resistance on that line? Yes, we did. Yes, we did. Then we couldn't climb below it. And what happened? We had that sell-off. We came down. So this area to me, and again, you could actually draw a box. You can draw a line. You can get one of these here. And if you want to get the wick down from here and you want to maybe get this area here, you can. And that's going to be like a $2,000 area. You can do that. But just again, just to not crowd the charts, to make it as simple as possible, 30,000 is a nice round number, enough touches here of support that were established. We saw some good established areas of resistance, then that sell-off. Now look at where we're at. We are so close to it. This would be, if we were going to break out of this channel and we're going to break to the upside, this to me would be a clear area of resistance. Could we break through it and just climb up to 35,000? We can. However, history, looking to the left, shows us that the probability is going to be that we're going to find resistance in here, maybe some rejections, a couple of 2-3 touches before breaking down. It's very unlikely that on the first try, we're going to break a 2-year area of resistance and we're going to flip that back into support. Is it possible? Yes. But as analysts, we deal in the realm of probabilities. And the probability is that we're going to have some sort of resistance. Now, again, looking at price action, nothing else, no indicators, no oscillators. What have we done since we put in this higher low? We've been up only. So, removing your bias, removing your bearish or bullish bias, strictly price action. I'm going to take this off. It annoys me a little bit. Being that we have not retraced this move, we're still up in this area here, and we're so close to back testing this bear break. It only makes sense that we'd hit here, and what would happen here? What would happen here? I'm not saying we're going to go down to new lows. We're going to go to 15. No, just simple, regular price action. We've established a reversal of trend. That's already been established. That was established on this candle here. Maybe to other traders, it wasn't. To me, the way I view markets, this was a reversal of trend. This was a clear trend. Higher, lower highs, lower lows. Now we put in a high, lower high, a high, a higher low, higher high. We haven't quite defined the higher high yet because we haven't had that correction for that new higher low. But I believe that if we break out of the channel, we're going to put in our new higher high. And then it's only logical that if we do that, and this is our swing low, we can call it a swing low or the higher low, then we would then look for a continuation the way we did in this move here. And for that continuation, I typically look for a 382 or 0.50 for that continuation. That will establish the new higher low, and then I'll be looking for that higher high. Then I will be looking for a break above that 30. So I believe that we're probably going to hit it here, reject, maybe give it a couple of times. I don't think we're going to break off that easy because I think this resistance lends itself for the opportunity to continue this bullish market structure to get us to those areas that we all want. We all want to see, I want to see 34,000, 35,000, 36,000, but I don't want to see it with the parabola. That I don't want to see, because that is not a disciplined market structure. That is not a market structure that's indicative of moving up in a proper way. I know guys that are bullish, they want to see one candle straight up to 60,000, but markets don't work that way. Markets that have parabolas will have the same effect on the way down. You need to establish a strong market structure. The way we establish a strong market structure on the way down, a bearish market structure with structure, so it isn't just a straight elevator down, we want to do the same exact disciplined market structure on the way up. In order to do that, we have to put our bull bias aside, and we have to say, if we want to see further, you definitely want to see a pullback. That's healthy. That establishes not only a back test and establishes that new support based off the prior resistance, but again, establishes that higher low, higher high, gives us areas that when we do pull back, we have some bad news. We have structure. We've built a base of support that will most likely hold in the event of some sort of catalyst that'll bring us down. When we have moves like this and we don't build a structure and bad news comes down the pipeline, it's much easier to just break down. Luckily for us, this was a reversal candle, in my opinion, and we have very strong support coming back down when we revisit this. This, in my opinion, will not break down very easy. This is a range as well, because these were wicks and these candles have a very well-defined line. So let me do this here. Just let me erase this. And if you look at this here, I'm going to go ahead and just snap a line here, because both of these areas could, actually, I'm going to use this line here just so I don't have so many lines on my chart. So we have the wicks up here and the candle bodies here, and they're very well defined. So you could use anywhere between 25,287 and 24,264, 25,300, 24,300, just to round it off. Anywhere in between there, I would consider a very strong area of support. So that gives us about a $1,000 range inside of here. After a $6,000 candle, that's pretty reasonable to expect that you have a $1,000 range in here. So anywhere in between here, as long as we don't break this here, then we have a good chance of establishing a higher low for continuation into a higher high. This will also give the reset of those oscillators to give us that rubber band effect to break through 30,000. If we get rejected here, we come back down here, we establish that. On the way up, it'll be easier to break that, because we're not hitting an area of resistance on this. Look, we're not hitting it. We're not hitting on declining volume. Yes, this volume here was great. Look at the daily time frame. It'll show a little bit better. There we go. This very flat volume. It's very hard to break such a 2-year resistance line on this type of volume. You need that. You need that trend. You need a established trend moving up with volume, with force, with determination, and that is usually accompanied with the oscillators being in a reset, coming back down to the medium line of the MACD, coming back down closer to the 40 points on the RS, 30 to 40 points on the RSI. So you have plenty of room. Not that the RSI can cap out the price action, but generally you want to look at areas that were oversold, profit taking happened. You have fresh liquidity to come back in and inject into the market, giving us a greater possibility of breaking into a new area of support, and we flip an old area of resistance. So this area here, I'm watching very carefully. We're almost there. We're almost there. We're only about $1,000, about $1,500 away from this area here. So to me, the fact that we're so close to it, it was such an important area of support back here in 2021 and 2022 that it seems logical that we'd hit it here. Doesn't mean that we're going to, but if we're going to come back, if we don't break down from here, I would say this would be the line in the sand that we'll see some sort of retracement in here. Now, when we do, again, I would love to see this hold here, anywhere inside of this hold for continuation. That's what I would be looking at. I won't be looking, if this breaks down into here, I'm not looking for anything lower than that. Why? Because the market is not telling us it's going lower. The market structure is telling us that, indicators, and I'll keep the drawings. The market is telling us that this was a reversal candle. We put in the structure we needed to see with a high, a higher low, a higher high, whether it's here or here. So this is now telling us that we're setting up a market structure to the upside until it does what? Until it invalidates. Where does this reversal of trend, this upward market structure invalidate? Down here. When you lose the prior higher low, it is now invalidated. We can go all the way up, down, as long as we hold, what is this exactly? As long as we hold 19,549.09, it will still technically be a higher low. The moment we break that, we have now invalidated this. Then we can start looking for lower targets. Then we can say, okay, you know what? Let's, I'll go ahead and snap this line. Well, actually, I'll use this. I just hate having too many lines. Now we can say, okay, we broke that. What now? Now we can start looking for these targets here, 18.4. We can start looking at some of these lows to hold, 18.6. But there's no need. There is no need to really worry about this. I mean, you can map it out. Obviously, you want to have both scenarios. But to me, this is much more, it's less important than building this structure here, making sure this holds, playing it so that you are maximizing your shorts to the downside and you're preparing for the bounce to the upside with clear invalidations. Once those invalidations happen, you can get out of your trade. Keep your percentages low. 1 to 3% in this market is what I would recommend. No more than that. You keep that low. And if we break below this line here that I was mentioning before, this line here, you cut the trade and you wait. You wait and see. You have to use patience. We're still not in a bull market. Reversing the trend in a bull market are two very different things. This is just the beginning. And this is so early in the game that it could very well invalidate. We have to, and the more higher highs and higher lows we put, the stronger the market structure becomes. Because now we have a very established, well-disciplined, good areas of prior resistance that will now hopefully turn into support. We can now start relying, if you're an EMA trader, you can start looking at some of those EMAs that flipped, that were once resistance, that will most likely work as support in the future. So you guys kind of get my point. It happens in a progression. You need the data for that. You can't just start guessing your way that, oh yeah, we're going to go here, we're going to go there. You have to make a case for it that makes sense, that has confluence, and you have to take it step by step. The only thing I'm looking at right now are two things. Do we make it here, or do we break down from this channel? That's it. That's it. That's all we can do right now. Look, we have clearly said that we are inside of here. We're inside of here. We're inside of there. Only two things I'm looking at. Do we break out of here, or do we get rejected off of here? Or do we break to the upside? To the upside, very short trip to here, but I'm focusing on here. I'm doing my trades on the lower time frames based on what I see here. Once we hit here, obviously, it's the new game plan. Once we break out of here, it's a new game plan. Then we can start focusing on some of the lower targets. But right now, if you're day trading or scalp trading, You're not really focused on the weekly or the daily time frame. You're looking at the 15-minute, the hourly time frame. I've been posting the updates on my free Telegram channel, 15-minute time frames. Hour is our high time frame. 5 and 15-minute is where we're living at. That's it. Right inside of that area right there, inside of that bubble, because the price is inside of that bubble. So you have to respect that bubble until that bubble is broken. If you're day trading, you're looking at those small time frames. You're not day trading off the weekly time frame. It's nearly impossible. Those are more to get a perspective of what to look at and to give you some boundaries, to give you some ideas of where heavy resistance is going to be met. That's where you use these weekly time frames. For now, inside of here. Hope that makes sense, guys. Let me just go to the hourly time frame. I've been kind of just, I want to give you guys just a quick overview of what I'm looking at. And even when we come in here, you know what? I can actually move this up just a little bit. I'm going to move this up just a tiny bit because I do see room here right there. Again, I just like to find areas where I can get the most respect. And you can see here where these wicks give it a real clean, defined area. Again, I don't care about these deviations. I just want as many of these defined wicks that were the resistant points that brought us back down into the middle or the bottom of the range to get respected when I put these channels in right now. So right now, that's all we're doing. We're trying to break above that prior area where we got knocked down before, and we're unsuccessful. We've deviated a couple of times. So did we do the same? We did the same thing here, and we did the same thing there. It still resulted in us revisiting that medium line and revisiting some of the bottom areas of the channel as we did before. So I'm looking for that. I'm looking for that right now until we break out of this deviation. And when we do, again, the trip is going to be very short-lived. Now, I tell you I like looking at confluence, right? Well, here's a good area of confluence. I'm looking at the HyBlock data. I just refreshed this. This is an aggregated look of BitMEX, Bybit, and Binance derivatives. These high areas, these bright areas are what I'm looking at. These are the concentration of where those high liquidity, not liquidity, but high liquidation, better said. I use the word liquidity again just for the simplicity of it, but I got corrected one time. So I try to make a point, not just to kind of give the actual description, which is it marks the liquidation points where the heaviest concentration of orders are at. Not to say these aren't. So if we take this whole area, knowing that this is the highest, just like this is the highest, as far as dollar-wise amount concentrated in here, but nevertheless, there's still some in here. Taking the very top of this, we're at 29.6. Can we find confluence with our $30,000 target? Look, yes, we can. Look, I'm gonna put this yellow for representing HyBlock. So if we go and knock those out, do we find some confluence? Yeah, we can. Look, very close to that $30,000 target. So then we start developing a case, a good case, not just based on your hopium or based on feeling or based on a Twitter post. We've got confluence. What's going to make the price go up here other than hopium? Well, the fact that price action likes to backtest. Backtest, continues to backtest these areas. We lost it. We haven't backtested this. Since we lost it in June of 2022, 10 months, 9 months ago. Almost 2 months. 2 months left. We're going into April. So, wow, the year's going by so quickly. So 10 months ago, once we broke that, we never back tested it. And the fact that we're so close and the fact that we have some liquidation data from HyBlock in that vicinity, very close to that vicinity, I feel comfortable shorting from here. Now, if you're not a shorter and you just want to take some profit, that's fine. Take some profit. If you're a day trader, you want to take some profit and you want to rebuy back at a fib level for a continuation move, you can formulate a good rebuy area, a reload zone, if you will, on a continuation fib, like a 382, a 0.50. If we break above it, give yourself a stop loss. Because just because I say that 30,000 is our border doesn't mean we can't go up to 35 or 34,000. We very well can. Probability is not on that side. Probability is on the side of 30,000 in my opinion. But in my opinion, it doesn't really matter. The price action is what matters. So you have to pay attention to that price action. You can't say, well, it's X person said that's 34,000, so I'm going to wait to there. No, you don't know. None of us know. We're all looking at the same chart. We all interpret the price differently. And we're all going to be wrong at some point. But this general vicinity, I think it's an area where most traders that are experienced are looking for some sort of resistance, whether it be here or whether it be, look, you can raise it. Honestly, you can go all the way up to right here, up to $34,000 and find very good area. Support, resistance, support, resistance, support, all of this support, resistance. So you can that's a $4,000 area. I like to narrow it down just a little bit more. All right, guys, I think that's pretty much it. I've been going for about 30 minutes. I do want to talk about XRP, guys. I think XRP is something that you guys are going to want to pay close attention, and this is why. Let me show you the price action of XRP as of late. Clean chart. If you look at Bitcoin, you look at Bitcoin chart and you put it side by side, you will notice that Bitcoin has been pulling back inside of that range, and yet XRP has not been in a range. It has not been following Bitcoin. You've noticed that when Bitcoin runs, everything runs at the same time. Let me explain to you something, guys. For those who are new, when Bitcoin takes off and everything else takes off at the exact same time, don't think that everybody at the exact same time all of a sudden just bought their favorite coin and that's why we all went up. Those are algos, okay? They're programmed to go up. Those are not real buyers. Those are there to create liquidity. So what that does is that gets everyone excited. Everything turns green and it entices people to buy. So it's kind of like a starter. Let me get this party started. Let me get the dancers out there on the floor, and they're generally going to get the rest of the people to come and start feeling the groove, feeling the music, start grabbing a partner, start coming into the dance floor, start participating, and then they back away and allow the liquidity to flow. When you see a coin like this, that's just climbing and climbing and climbing, regardless of what Bitcoin is doing, that is real liquidity. These are buyers buying and buying. And in crypto, insider information is not illegal because there is no regulation. And when we've seen moves like this, later on down the road, we find out what it is. This could be one of two things. So I want to be very, very clear that you need to be cautious because this is crypto. I'm going to give you the good case, the case that everybody wants to hear. These are the insiders buying XRP because they know there's going to be a resolution. They're working out, they're ironing out the wording for the SEC case. It's coming to an end. They know that they're not going to get labeled security. They're going to settle, whatever it is. It's going to be here to stay. XRP is going to stay. They're going to pay a fine, and they know this, and they know that when they announce it, they want to get ahead of it. They want to get ahead of it, so they're accumulating and accumulating and accumulating. Another way you can read this, and I know the bulls and the XRP army don't want to hear this, but this is what's happened with other coins. How about that? I won't say it's going to happen here. Other coins, this is what's happened. Insiders know that it's going to fail. So what do? They create FOMO to create liquidity to exit. And then they'll announce sorry, we're going to close shop. Things didn't work out. We tried our best. We're very sorry, guys. We appreciate the community support through the years. We're going to do better next time. We've all seen it. Those who've been here long enough have seen it. I'm not saying that's what's going to happen here. Hopefully it's the first case that I talked to you about, but never discount it. Keep it in the back of your minds as a possibility. This way you're always protecting your profits, you're always protecting your capital, and you're writing your stop losses up, or you're taking your profits on the way up. However you want to play it, you are protecting yourself. So XRP, I think right now is giving us a good opportunity. Now TA-wise, it's following TA really nicely. So we've had on this last run-up that it had here. Let me show you something. Look at the way it respected. Came right down into this area where I like to load up. It bounced perfectly off 706. Any one of these three levels is a great, or just divide your orders into these three levels. It's a great area to load up on a retracement. We had a nice little move. We gave it back perfectly into the zone. What do? We put a nice bullish market structure, a nice double bottom, and we took off. Now we've had a beautiful run. Why would I expect anything different? Why would I expect anything different? Here's my swing low. Here's the swing high. Now, do we have any confluence? Is there any confluence with this area? I'm going to make these green for support. Wow, look at that. Look how perfect. Look how perfect the 618. Look at this. Do you know how many things had to happen here and had to happen here to line up exactly with the future price of a 618 retracement? That shit is incredible. Think about this. This 618, we could not have known what the top was in order to get the 618, we had to know where this top is. But yet, look at the way it lines up. Absolutely perfect. That is TA porn is what I like to call it. It's just so beautiful. This area here, now because you saw this come down to 706, are you going to get greedy here? I wouldn't. I would start scaling into this. And there's this here. When you come down to 618, there's two different areas that I look for to reload. One of them I call my 382 continuation rule, which is you see on bull flag patterns, it'll come down to a 382 and then continue. When it comes down to the 618 to my reload zone, it typically doesn't just bounce off of here and go to a new run. It does exactly what it did here. It'll consolidate in this area, maybe give you a double or even a triple bottom, and then take off. So if we come down in here, I don't expect a move back up. What I expect is same thing, a consolidation, double, triple bottoms, and then a go. When you do a 382, however, it does tend to hit 382, maybe wick down to 0.50, and then bounce straight up to create another higher high. So that's another thing you have to keep in mind. So let's do that here. Let's do that and see where that would land up. That would line up. So that's a 382. 382 there for continuation. Now, is there any confluence there? Look at that. Look at that. Look at the way these candles ended right at the 382. So if I'm looking at this, I'm looking to trade it, and I'm looking to reload. If you took some profit and you wanted to buy some back, I'm gonna keep an eye on this here. So I'm gonna wait to see if it first of all if it respects this line. If it respects this line, closes above this line, and starts to move up on the next candle, on the preceding candle, maybe where I want to start taking. If you want to be really aggressive, you can just put your order there, and then you can wait for the next candle to open up. It opens up higher, continues to go. You can start scaling in, and the likelihood is that you're going to continue. Now, if we fall below it, give yourself maybe right there. If it breaks below, what is this? 51.20. I'll cut and I'll try again for here. Now, keep in mind that this the continuation rule can hit the 50% line as well. So let's put in the full fib. Let's put in the full fib. So between 382 and 0.50, these two can hit. So unfortunately, between here and here, I mean, that's a pretty good distance. So you're going to have to make a decision. If you feel like this is going to continue from here, you can play it aggressively here, or you can wait for some confirmation. If not, guys, this area here, I would not ignore this. I would not get greedy and say, I'll see if it breaks below. No, I would. The way I'm playing it, I will. If it breaks here, and I get stopped out, no big deal. I'll give it another chance here. Once it hits here, I will load up. If it breaks below 786, I'll exit and I'll try again. But for me, this area here, this reload zone here, if you're not going to play it aggressively on the 382, this area here for consolidation for XRP, I think is really important. Now, top side objectives, what would that be? Guys, this thing has, when this thing bounces again, look at this. I want you to see this. We're not even looking at EMAs. We're just looking at strictly market structure. Look at this beautiful double bottom. I know there is a double bottom within a double bottom. That's even more bullish. But the end of that double bottom, look at this right here. History tells us that these double bottoms, these W's, they complete. And the completion of that W is usually this candle body or the top of this wick. Anywhere in here is a completion. That is a great trade. That is a great trade. You get it down from this 618 up, even if you do the candle body close, that's 78%. To the top here, 93% trade. 93% trade. That is a... Now, don't get me wrong, guys. This is not going to go straight there. I'm sure it's going to have another retracement somewhere along the line. I would put, you know what I would like? I feel more comfortable. Let's go down to the 4-hour time frame. And we're going to do a harmonic pattern based off these two moves here. We're going to do a harmonic pattern based off these two moves. So let's do this. Let's do this. Actually, I want to do this here. And I want to see what this did. How well this did this harmonic pattern. And this one looks like it blew it out of the water, though. Usually you get the bottom here. Yeah, this one went way above. And you can see where it stopped. That's what's crazy. You see you take it from the lowest swing low, and look at this. If you draw a line on here, take this line. Look at that. The initial was a rejection. Things are just, the FOMO's kicking in. You cannot chart FOMO. And this is basically what it is. People are just like, oh shit, I want some of that. I want some of that. But the fact that we are breaking down here, it kind of validates that notion that this was just FOMO. We didn't really continue. We're getting exhausted. We need a pullback. But we're going to use these levels for that pullback. Now, on the next move to the upside, let's measure that move. What would that move be? We had the swing low to the swing high. Okay, now here is pure speculation because we don't know if we're going to go from a 382 or we're going to go down to a 618 or to a 706. Let's just take it, same thing, from a 618 perspective. Make it easy, golden fib. Can we find some confluence? And where does that target leave us? Because again, ultimate target, 93%, which was like, I think it was $1. But we're going to have some retracements along the way. Now, when I do this is what I'm looking for now. I'm going to go up here. Now, where can I find some confluence on higher time frames for this harmonic pattern continuation? I don't know. Let's look left. There's the harmonic pattern. Let's look to the left. Has price action ever treated this line as support or resistance? Resistance, support, resistance, not too good support. I would say this one, even this one, it kind of broke above it. But nevertheless, look at this, how well this area here. Look at how perfect this area was here. Look how close this area. Look how great this area resistance was here. This area resistance here. This is probably a lot cleaner than these two wicks here. I would say this one's clean. This one is clean. This one is clean. This one's definitely clean. This one's absolutely perfect, clean, perfect, clean. So there, look, and here it is once again. So again, you find that conflict. You make a case for that continuation, where to take profit, where to rebuy take some of the profit money and rebuy back in there for a greater achievement. Or you can just let it ride. If you're an investor, a long-term, a swing trader, you can let it ride to the objective all the way to the very top, to the end. Nothing wrong with that as well. But as a day trader, this is how we think. We think of the smaller moves. We think, okay, we think of extensions, maybe a 1.44 fib extension or 272 extension. I like using harmonic patterns for my extensions because they're really accurate. They play out very well. Whatever tool you use to pull profit, as long as it works, I'm all for it. I'm just giving you an example of what I look for and how I take profit and what I like to look at in the confluence and my train of thought. There's a lot of good traders out there, guys. They have different systems. It's great. Whatever you relate to is what you should be following. If what I present to you doesn't make sense, then go out there and find a trader that will give you that sense that you understand what he's coming from. Ichimu Cloud, if he uses the Bollinger Bands, there's a ton of different tools out there. This is how I learned, so this is what I continue to use. Doesn't mean it's the only thing I use all the time. It's what I use the majority of the time, but I also look at other. I have Ichimu Clouds and other Bollinger Bands and other templates that sometimes I'll use for confirmation when I see posts on Twitter. But for the most part, I tend to use the same things just because you build that muscle memory. And it becomes so much easier. There's so many things you have to factor in when you're trading that when you do it from muscle memory, it tends to work out much easier because you know what to expect already. You know what tools you're using, and you know that it works more often than not. And that's really the key when it comes to trading. You have so many things to think about that simplifying the tools, to me, is everything. All right, guys, I hope this was helpful. If this was helpful, guys, please hit the like button. It's the best way to support the algos that'll get this video out to as many people as possible. I'm back from vacation. I will do these more frequently, 2 to 3 days. We'll give another update. We'll see where we break out, or if we stay inside of this range where we're at right now. I will keep you guys updated. If something drastic happens, then obviously, like we did last weekend, where I gave you guys updates all through the weekend, I'll do that as well. But typically, in this type of environment, I'm going to do it 2 or 3 days. I think is a reasonable amount of time to wait in between. If you want to join my free Telegram group, like I said before, send me a DM. If you want to join my Discord group, which is a paid subscription, you can visit my website, bleedingcrypto.com. Educational, that's where I teach people, take the time to teach people how to trade, do daily videos, talking about the markets, taking alt requests, looking at Bitcoin, looking at HyBlock data, looking at spot heat maps that are aggregated between buys and sell orders and things of that nature. Anything else you guys need, you can always hit me up on Twitter. Thank you very much for listening, and have a great day.